Hi, welcome back. This is the Price Action Analyst YouTube channel. This is the third and last video I'm going to do on the Netflix trade that I took. The Netflix trade I took was a put option debit spread. So I bought a 440 put and sold a 435 put. And so what had happened was, recognizing that this was a previous high, price had come up here and washed that high. It had come up and retested the high and was near the Bollinger Band, and I went short somewhere there. Price pushed up against me and eventually went short. Now, had this been just had I bought a put option here, say a 440 put by itself, that would have at least doubled in price. The problem with put debit spreads is the price moves in your favor in a debit spread a lot slower. And so I was looking for, let me just get the values for you. So I sold that, that put debit spread cost me $250, and I think I was trying to get like $410 in total out of it. So that's a profit of say $150. And I think in that entire move down from $250, I think the highest that got in value was like $360. So it's very slow to move in your favor. So that's just something to keep in mind with put debit spreads. I mean, really, a put debit spread really is a bet that, if you buy a put debit spread with an expiry in 40 days, what I'm really betting is that in 40 days, price is below 435. So if price is below 435 at expiry, that's worth its maximum value, which is the difference in the strike prices times 100. So if at expiry, I paid $250 for that here, and at expiry prices here, my position's worth $500 in total, which means I'm up $250. It's just that it's more determined by time value, you could say, than price movement. So again, $250 there, $360 there. I should have exited it, but I was hoping that price was going to roll over and continue down. So I'm doing a third video on that because this is a good example of a couple of things. This turned up into an ideal long setup, and I should have seen that here. I should have been out of that trade here. I actually got out of the trade here. I got out of the trade here for basically break even. So I paid $250 here and I sold it for $250 there, which kind of sucks, but I decided I'd rather just get out for, break even than take the heat here and be losing money, because this upward price action here is so strong. I expect this to come up and test this top trend line here. So I did the right thing in getting out of the trade. I did the wrong thing in not getting out of the trade here, and probably not taking a long position here. So I just want to talk through what happened here in terms of this turning into a long setup and the psychology of not being able to follow what price action's telling you because you're in a position and you're kind of hoping the position's going to do something else. Once you learn to get an idea of where price is likely to head, the next thing to overcome, and possibly the harder thing to overcome, is the psychology of trading. When you're in a position, when I'm short here, I want price to go down so I can look past this. When I'm out of the position, it's so obvious that this is going long. You're like, why didn't I follow it? And it's because I had a short position. I was hoping price was going to go down. And I saw this. I was conscious of what's going on here, but I was like, no, I want to hold it. I want to hope it's going to go down. So psychology is a big part of this game. So I just want to recap here. Price was strong here, rolled over. You generally, when you get a strong upside here, you get a roughly 50% retrace, and then it was a retest of this previous high as well. You got buying action off here. When price got back to this previous high here, it washed it. It was at the top of the Bollinger Band. You got selling pressure. And then when price got back down to this level here, what did you get? You got renewed buying support. So this is really important. Let me just see if I can draw this up. So price came down in here, and there was buying action, buying pressure where you'd expect it at this previous low, and you've got a wick. Now you've got evidence of buying pressure in the form of a wick, and you've got it poking outside the Bollinger Band, and this isn't an uptrend. So you're in trading, your most ideal setup is to take. You want to take upside trades where price is on the bottom Bollinger Band in an uptrend. So that's generally, it's hard to find those, because when price is trending up, it's nowhere near the bottom Bollinger Band. So this is an uptrend, first leg, second leg. Now we're consolidating in a, an upward flag pattern. You've got a downward 50% retracement. Again, you're nowhere near the Bollinger Band there. Upward, down here. So what's happening here? I'm retesting this previous high where price rocketed off of. It's a retest of that. It didn't wash it, but it's a retest, and it's left me a wick. So whenever you see that, when you've got that wick on the Bollinger Band in the scenario I've just described in an uptrend, anytime price gets back into that wick, hit it long, like religiously. It's not going to be right all the time, but this is a high probability setup. So what happened here? Price went up. It looked like it was going to roll over. What did it do when it got into that rectangle? Bang. So in a perfect world, or a world where I had my psychology sorted out, I'd be in this put debit spread short. I'd see that. I might even get out there. Price would go up. I'd expect it to roll over. And if I'm still in that trade, I should be, well, you know what? I'm going to wait till price gets into that rectangle. I'm going to exit this put position, and I'm going to take a long position. And I wouldn't, a call debit spread would be a lot better here, because in this uptrend, I expect price to keep going up. So it's got more chance of moving the distance I require it, or, if it's the 45 days till expiry, in 45 days, I've got more chance of price being above this level, because it's only going to test it so many times, and then it's going to push up. And if it pushes up outside of this trend line here, if price comes up outside of this, retraces and hits that, it's not, eventually it'll come back here, but you got a pretty good chance of within 45 days, price is nowhere near this level, which means you're going to get the maximum value of your debit spread. The simpler way to do it is just to buy a call there. Like, I'm pretty sure, without doing the numbers, I'm close to doubling the value of that call option, maybe more. So that's just something to think about. I got out of that trade for break even, but it feels like a loss to me, because it's stupid of me to not have taken advantage of that. Like, I saw everything here. I was cognizant of everything here, but didn't really care. All I was caring about was price was going to roll over. What I should have been thinking was, price is going to roll over, and when it gets to this wick, when it gets to this rectangle, I'm going to exit my put debit spread, and I'm going to go long this trade, because it's just, that's a free kick right there. Like, it doesn't get any better than that. So that's the last video I'm going to do on that. I think this is the third video on that Netflix trade. I entered there short, but there's a lot of good stuff there. There's a lot of good examples of a whole range of things there. This level here, This is resistance. When price goes through this, this is now support. This is, you know, from the training that I did, this is a fish hook trade. And those fish hooks, unless they're really strong, they'll, you know, generally will retrace to 50%. But you've also got now, this is a retest of this now support level here, which when you have air and a retest, it's called a reverse anchor. So that's also a very reliable long. And then this trade here, like this trade would have been ideal if it had just washed this pivot here and left a wick, but it doesn't need to. The fact that that went down and left a wick there, it means that there's a whole bunch of buying support here in this wick, especially with this wick being outside of the Bollinger Band. And now I've got a bottom side Bollinger Band wick in an uptrend. Hit this every time. When you get price retracing back into that wick, hit it. Just all right. Thanks a lot. If you liked the video, give it a thumbs up. Please subscribe and let me know in the comments if there's something you're looking at that I can have a look and give you some commentary on. Thanks.